Imagine having $1 million sitting in a bank account right now. It feels safe, doesn't it? But here's the reality. Every single day, inflation is silently eating away at your purchasing power. Sitting in cash is not a wealth strategy. It is a slow, guaranteed loss. When you reach a certain level of success, the game changes. You are no longer just trying to make money. You are trying to protect it, grow it, and ensure it lasts beyond your lifetime. If you have liquid capital of $1 million or more, standard financial advice simply will not work for you anymore. By the end of this video, I will show you exactly how smart money is being positioned today. We will look at a proven blueprint that balances the explosive, high-growth engine of the Indian economy with the rock-solid stability of global markets. My name is Kunal, and at EPK Capital, we build wealth for generations. Let us dive in. Over my last 20 years in wealth management, I have seen a massive shift. India is no longer just an emerging market. It is the core growth engine for global portfolios. But how you invest in India matters. For the retail investor, buying a broad index fund is fine. But for high net worth families, we need to look deeper. We are looking at the massive transition from the informal to the formal economy. Think about infrastructure and specialized manufacturing, and the unstoppable rise of middle-class consumption. To capture this, you need a mix of active equity management and access to private markets. Private equity and venture capital allow you to invest in phenomenal Indian businesses before they ever go public. We are seeing incredible opportunities in sectors like healthcare, domestic manufacturing, and technology services. However, the Indian market can be volatile. High growth comes with bumps in the road. And that brings us to the most critical mistake wealthy investors make: keeping 100% of their money in their home country. To protect your wealth, you must look beyond your borders. This is Pillar 2. The global anchor. Why invest globally when India is growing so fast? 2 words: currency depreciation. Historically, emerging market currencies lose value against the US dollar over time. If your entire net worth is tied to one currency, your global purchasing power is constantly shrinking. By allocating a portion of your portfolio to US markets and global assets, you create a natural shield. Your global assets become more valuable. But it is not just about currency. It is about access to mega trends that simply do not exist in local markets. We are talking about the pioneers of artificial intelligence in Silicon Valley, global pharmaceutical giants in Europe. You do not buy the S&P 500 just for growth. You buy global equities and US Treasury bonds to act as the shock absorbers for your portfolio. Now, let us bring it all together with Pillar 3, alternative assets. Once you cross the $1 million threshold, traditional stocks and bonds are only half the story. The ultra-wealthy protect their capital by investing in assets that do not move in the same direction as the stock market. First, we look at commercial real estate through real estate investment trusts, or REITs, consistent rental income from premium office spaces and warehouses. Second, private credit. This involves lending capital directly to strong, growing businesses, predictable high-yield returns secured against company assets. And finally, the most ignored aspect of wealth creation: tax-efficient structuring. It does not matter what your return on investment is if you are giving half back in taxes. Structuring your investments through the right family trusts or holding companies can save millions over a lifetime. If you have stayed with me this far, here is the one piece of advanced advice that most advisors will not tell you. Stop chasing the absolute highest yield. When you have significant capital, your primary goal is no longer getting rich. You are already rich. Your goal is staying rich. Focus on risk-adjusted returns, not just the top-line numbers. Ask what structure will give you 12 to 14% consistently. Managing multi-generational wealth is complex. If you want a customized, institutional-grade strategy, we should talk. At EPK Capital, we build wealth for generations. Click the link in the description below to schedule a private consultation. Thank you for watching. I will see you in the next video. Music fades out gracefully.